What is up, ladies and gentlemen, boys and girls? Welcome to the Monday Market Update, our first Monday Market Update since Jerome Powell's riveting, rousing, ribald speech on Thursday to a group of central bankers at the yearly Jackson Hole, Wyoming gathering of the elites of the world, or the people who lend the elites money anyway. My name is Sean Grapevine, Vice President of Product Strategy here at U Mortgage, and I'm joined today, as with every Monday, or most Mondays anyway, joined by Matt, the mortgage guy, Gouget, former poker dealer, current mortgage dealer, jack of all trades, master of many. Welcome, Matt.
Happy Monday to you, brother. I'm gonna get some coffee in me. I'm gonna get myself started. Yeah, I'm not as young as I once was. My 11-year-old had me out late at a concert, some 21 Pilots last night, and so I got to get myself caffeinated up to get back in action, back at full speed.
Wow, more Pilots than United furloughed in the last week. That's a lot of pilots. Actually, I can't remember. One of the carriers furloughed some pilots recently. Sorry if you're affected by the recent airline layoffs. I apologize for that joke. So you saw 21 Pilots? How was the show? Was it good? Do you like them?
Phenomenal.
Really?
It's pretty cool that I can go to a show like not knowing much about the artists and just enjoy the fact that like in 2024. I don't know what they call that, but like the cool screens and the graphics and all the stuff that goes along with the show is like, it's crazy what they can do nowadays. It's probably a little bit different than a show me or you would have saw in the 90s when we were young whippersnappers.
Well, let's not.
So,
I mean, let's not. I'm 30. I'm 37, Matt. I don't want to be lumped in.
So what does that make you? It makes you like 1987. You could have been my 11-year-old son in 98 watching a show. Like you're not that much younger than me.
Man,
Mr.
what would I do to be your 11-year-old son?
Well, pretty good life.
sounds like a rousing weekend. Mine was very relaxed. I ran 15 miles on Saturday.
Nice. That is a nice long run, man. How'd your body do?
It was good. It was meant to be like an easy run. So like keep my heart rate nice and low, really just get the miles in the legs. Yeah, it felt fine. I was pretty tired the rest of the day, but like the next day, no soreness, nothing. It was great. It was really beautiful too.
Love it.
It was a nice day out.
Good work.
So speaking of beautiful, Jerome Powell last week, he had an effect on mortgage rates. And the way he did that was, like I said, by this gathering that is sort of by default led by the U.S. It's held in the United States in Wyoming with all of the major central bankers around the world, all the Jerome Powells of all the different countries. Did you watch the speech or review the minutes?
I did not do either. I watched mortgage rates and their effect on mortgage rates and read some highlights and some articles, but I didn't actually get in there and, you know, I didn't have any napping to do or didn't need to put myself to sleep. So I didn't hear that or replay that.
Well, yeah, I think you and I are to the point where we can watch mortgage rates and sort of infer what was what was said, or the other way around, right? Like see what's said and then guess what's going to happen to mortgage rates. In the first 2 minutes of the speech, he used the term "the time for rate cuts has come." It's the first time he said it out loud. He didn't necessarily say it's going to come on the September 18th Fed meeting, but like that was more than implied, and I think the markets see that as well. And it had the markets were so sure that rates took a dip, and we are nearing the mid to low sixes on a 30-year conventional rate. And if you'd asked me 18 months ago whether I thought that was a good thing, I would have said, please God, no. Ask me today, I say, hey, that's a competitive, affordable, fantastic rate. Have you seen this? Have you seen this show up in your rate stack, as we call it? And then follow up question: have you seen that like your clients or agents are like how do they? What's their emotional reaction to say a 6.5% rate?
Yeah, I think that most buyers who are active and are looking, any rate relief, they'll take it, right? And for some that are on the fence, maybe they're pre-approved, they said, "Oh, we're not going to look for now." Going from 6.6 to 6.3, that might get them re-engaged. What I think is interesting for me to look at, I just pulled up like the last 3 years. It was around this time in August, September of 22, where we like went above 6% for the first time. And we've pretty much stayed there. There was a February 23, like for one day, we were 5.99. But for the most part, we've been above 6% interest rates for 2-year stretch now. And we've gone all the way up and touched 8% for a brief moment, but we've stayed in that range. And so the truth of the matter is, like, we don't know what's going to happen in this current environment with the current amount of inventory, with current buyer sentiment, if rates go below 6%. But the way they're headed, it's not going to be tomorrow or next week, but eventually rates are probably going to come to 6%, dip below 6%. And so I'm interested to see how that affects the market. I listen to some stuff, Sean, and I don't necessarily follow people who have drastic opinions one way or another. The sky's not falling, we're not crashing, and it's also like not like you have to buy today real estate. It's going to be up 30% the next year. Like I'm somewhere in the middle where reality lies. But there were some cases to be made for this crash up theory where interest rates come down. There's limited number of assets to buy. It could have quite the like crash up effect.
Ooh, I like
of
this
pushing
terminology.
prices up. Oh yeah, dude. All the terminology from YouTube. If you want more terminology, just get on YouTube University. You'll find endless videos with terms like crash up. And so like it's a real thing. There's people that are pointing to data and showing you their reasoning behind it. I think that while it might be a little bit like not guaranteed to happen, it's probably more likely to happen than some of these crazies that think real estate could decrease in value by 30%. And so interesting to watch. That's just as like an observer of real estate and a fan of real estate and somebody who's involved with this, like it's interesting to look at and just see, well, Jerome said it out loud, like you said in the meeting, his actions will follow. And like, there's going to be an unwinding of these mortgage rates. Like, what is that going to do to buyer sentiment, to demand, to the real estate market, to prices? It's cool to watch in real time.
I agree, and we do have it's not going to be affected by the recent rate reductions, but we do have the Case-Shiller numbers coming out tomorrow. Case-Shiller is the measurement of home prices in the 20 biggest metro areas in the United States. And I mean, the interesting thing is for all the hemming and hawing about the market, it has shown consistently that the housing values have increased by 6.8%, give or take, every set of 12 months for like the last 6 months. So, and that's too high, frankly, right? That's much too high for somebody who wants to enter the market. It's great if you own a house. It's not great if you want to buy your first house. So I do think that if it goes, up to 8%, 9%, 10%, that it is a concern. like I said, unless like for homeowners, it's great. But it does price some people out of the market for being able to purchase. So the reduction in rates probably won't be strong enough to cover some of the increase in value if we see those eye watering uh, like increases in value. That being said, we have the next Fed meeting is September 18th, and this chart shows the implied odds based on trader activity of reductions or increases in the Fed funds rate, which is how the Fed controls our economy's speed of growth, and in effect affects our interest rates that we offer. You'll see here this 500 to 525 range. Oh, and by the way, for anybody watching at home, would love to hear any questions you have about the market or about your personal situation when it comes to real estate finance. We're also we're an advice show as much as we are an information show. We're here for your counseling needs. But you'll see here, 67.5% of traders think there will be one interest rate reduction on September 18th. The current range of interest rates that the Fed is offering is 525 to 550. It's not pictured here because nobody thinks that it will remain the same. And then we've got a third of people thinking that there could be two interest rate reductions. It's not a huge chance, but if you look here, you can see that a week ago, 24% of people thought there'd be two. And if you look a month back, only 11% of people. So there's this slow build here. So it should be interesting. Looking forward a bit, we've got the November. So we're skipping October. Well, not skipping. There just isn't a meeting in October. Folks looking at 2 interest rate reductions, 3 interest rate reductions, and 10% of people think there will be 4 interest rate reductions. So definitely, like, the market thinks that there's 0% chance that there will only have been 1 interest rate reduction come, the 8th of November. Again, I think that's a little optimistic, but there will be some numbers that come out in the future that really help us make sense of that. For instance, we have PCE, which is the Fed's preferred measure of inflation, coming out this Friday at 8:30 a.m. All eyes will be glued to that. Again, it's CPI is the one that everybody talks about in the news. PCE is the one the Fed actually uses or purports to. Anyway, it's very closely linked to CPI, and CPI comes out earlier, so it gets a little bit more play time or airtime. But that should be really interesting. And then next week, we have the unemployment rate. So if you remember, Matt, tell us what happened during the last jobs numbers.
Oh, where they just swung and missed just a tad bit on the 818,000 jobs that we thought were created but weren't.
We haven't even talked about that. So with it, so the last like formal jobs numbers that come out monthly, it showed that far fewer jobs have been created than anybody expected, and far fewer jobs have been created than in any month in the last, I don't know, very long, since like 2020, I think, since COVID. However, they somewhat infrequently release revisions to a year's worth of jobs, does the Bureau of Labor Statistics. And last week, interestingly, they released these revised jobs number. And Matt, what did we see?
Oh, that was wild. Like, for anybody who missed it too, I could go down this rabbit hole for a long time, but it's interesting to see, like, hey, here's how the economy is doing. Here's how many jobs were created. And then they've got a number, and that should give everybody faith. Like, look, the economy is roaring, new jobs are being created. And then they can come out and say, oh, by the way, 818,000 of those, J/K, those weren't really created. And so, like, this humongous revision to the jobs report, which was like, I think it was March of 23 to March of 24, 800,000 of those jobs, the number was revised down. And so, in layman's terms, the job market is not as strong and as healthy as the numbers showed. I think for a lot of people, myself included, I felt that. I had those conversations.
You literally been saying it all this year.
Right. Yeah. And so it's not a huge surprise, but what it does is, in a context of Jerome Powell and the levers he has to pull, it helps him. It justifies, like, yes, it's time for a rate cut. I need to pull this lever that we have as the Fed to stimulate the economy. and help folks out. And so it's the two things he talks about. He talks about inflation to 2%, and what's the other word he uses for like he says them in every single meeting. That's not coming to me right now, but it's like
basically like
they've got two mandates, right?
A stable employment.
Right. Yeah. Stable employment and 2% inflation. And so anyhow, it's giving him permission to start, which is inevitably going to be a rate cutting cycle. And I think that's why we've seen a little bit of mortgage interest rate reduction with this latest news, but there's no real surprise. Like September 18th, there's going to be a Fed rate cut. Like that's not a surprise for people. I think once it starts happening, it's like, okay, it's officially started, and they start looking at what the forward projections are. That's when we're going to start to see mortgage interest rates starts to trickle down. And for anybody who's asking me about what's going to happen to mortgage rates, are they coming down? Right. They're coming down. It's just going to be a matter of, how much and how fast. I hope, here's my hope, that we don't see anything dramatic happen. And, the Fed doesn't necessarily need to or want to shock the market. It's just like, okay, we're headed back to this 2% inflation number. We don't need to do anything that's like drastic, no 75 basis point cut. And so that's going to be what people are watching. Like, not are we going to cut in September, or are we going to have 2 or 3 cuts by the end of 2024, but when are we going to have them? How big are they going to be? Like your stat showed, everybody's sure we're going to have at least 50 basis points by that November meeting. In the next 2 meetings, they're going to be like 50 or 75. People just want to know, we're going to do a 25 and then a 25, a 25 and a 50 and a 25. Like, how are they going to do it? And of course, if you ask Jerome Powell, he's data dependent. Let's see what PCE says. Let's see what these next batch of numbers say. And we'll, based on what those numbers say, decide from that.
Yeah. And I honestly think, like, come September, if there's only, one step down in rates, like, we could see mortgage rates inch up as a result of not hitting that. Like, they're not, because there is some level of surprise priced in, that we could actually see them tick up a little bit. We used to see that along the way when when they finally announced rates going up a little bit. Sometimes on the day they would announce, yep, we're raised rates, people would look at sort of the subtext of it and be like, okay, but they weren't saying like anything super dire or whatever, and you'd actually see interest rates go down a little bit, because like the market sort of prices in whatever percentage expectation there is of something crazy happening. So yeah, I think it should be a relatively slow roll down. Let's revisit our conversation we had last week about the NAR settlement. So that's the National Association of Realtors, who have completely, well, they haven't changed. The Department of Justice made them change how they essentially how you pay a buyer's agent. And now the buyer pays the buyer's agent. The seller can offer concessions, but it's no longer part of the sort of bulk package commission deal where it gets split up between the buyer and listing agent, paid for by the seller. Now the buyer pays, and they can find that money in a number of different ways. Have you, in the last week, like, come across scenarios where this is actually affecting your day-to-day?
Not anything drastic. And I think something that people need to hear is, while technically we're going to say, yeah, the buyer's going to enter an agreement with their agent, and they're, going to be in agreement to pay 2.5%, 3% to their buyer's agent, whatever that number is. Know that from what I've seen so far, and from what I've heard, and how things generally work, it's probably not going to change a whole lot for most buyers. In some cases it will. There's going to be, sellers that say, I'm not going to offer a buy side commission. And so there's going to have to be something figured out, whether it's in negotiations with price and with whatnot. But, the thing that's really changed is that this conversation is being forced into real estate transactions, where before it was kind of just understood. The seller kind of ties all this in, buy side gets paid, list side gets paid, and it's part of that conversation with the seller. The buyer doesn't have to worry about it. Now it's being pulled into those buyer conversations. And so great agents who don't mind communicating because they're pros and they know their stuff are going to tell their buyers, here's how it works. Here's the different things that can happen, the different scenarios. If they're offering a commission, great. If they're not, maybe we can negotiate it. If we want, we can offer a higher price and ask for a concession, and that will cover that cost of the buy-side agent. There's a lot of different ways that it can go. The agents that are going to suffer are the agents that don't know how to communicate that. Maybe they don't know how to communicate it, and so they're afraid to talk about it, so they avoid it. Like that's where people are really going to be hurt, in my opinion, is from what I've seen, and I don't want to knock Aunt Sally or Uncle Joe, but agents who aren't in it on a day-to-day basis and they don't have like great knowledge of real estate transactions because they only do 2 or 3 a year, they're not up to speed. They're not able to communicate it great to the buyers. So the buyers are confused and they don't know what's going on. So I guess my advice to kind of put a cherry on this is now more than ever, you have to seek out a real estate professional who really understands all of this and is working full-time, full speed, and can explain it to you. But honestly, Sean, as much as there's a lot of conversation and excitement and maybe even fear around like, oh my gosh, things have changed. So far, I've seen a lot of increased conversations, but not change in how things are being structured. That's just what I've seen so far.
Yeah, I think there will be some sort of like effects to the buyer that aren't necessarily overt. You will see. I was reading an article on Housing Wire earlier today about how uh, we're starting to see some commission compression on the buyer side. So commissions are down from an average of something like the 5 to 6 range now to the 4.5 to 5.5% range total for a whole transaction. And the buyer's agent is the one who's like feeling the brunt of that reduction. And they're saying that it's because increased competition, right? So if you're a buyer that's afraid of, okay, I'm going to have to pay my buyer's agent, I'd rather go with somebody who's only charging 2% than 3%. That way, if I get the extra concessions from the seller, they'll go to me instead of the agent. So I do think it'll add this little bit of jeopardy, and I do think it'll probably sprout up some like I said last week, some flat fee brokerage models where people say, buyer's agents say, well, I'll just do it for $5,000, and whatever they're offering over and above that, you get to pocket, which honestly is probably a pretty good business model, although it could lead itself to sort of the typical issues that run into high volume, low margin professional services, is like a reduction in, in quality and possibly an increase in total cost if they're not really going to bat for you, not negotiating prices down, not handling appraisal issues and inspection issues the way they should be. It could end up costing you more. But that being said, there's probably a place in the market for it. And I do think we'll see these sort of like the same way we see them with listing agents, right? I mean, look at Redfin with the 1% commissions, because sellers have to pay that. Now it's like, who's going to be the Redfin of the buyer side? Probably Redfin. But
Yeah.
I think there'll be a pretty big move to, and honestly, I mean, I think people have pretty good experience with Redfin. Typically,
Yeah. And there's going to be some winners, some losers, some quality players, some not so quality players. What I want people to understand is cheaper isn't always better. And like, this drives me absolutely crazy. I'll just one little rant and then I'll be done with it. People who are out there like just searching and they think that like the lower the price, the better. I'll give you an example in real estate. I'm not going to name the name, but there's an online company that says you don't have to pay 3% for the buyer's agent. If they're offering 3%, we're going to credit you back 2.5%. We only are going to keep 0.5%. I worked with a buyer. They were pre-approved buyer of mine that I had done a past transaction with. They were out there looking for investment properties. The crazy part is, Sean, at the $600,000 purchase price, we're talking the difference between 12,000 and 18,000 if they're paying 2% versus 3%, or maybe call it, the 18,000 versus 3,000 if they only pay 0.5%. They were so stuck on that savings, $15,000, that they went and offered 60,000 above list price on a home. Here's the best part. They didn't get their offer accepted. The list side accepted an offer from a traditional agent 30,000 less than their offer. So here's my thing. If because of reputation, if because of negotiating skills, if because of these other things, you pay $30,000 more, but you save 15 in commission, realize you've lost, right? That's a net loss of 15,000. That's not a win. Saying I overpaid by 30,000, but I saved 15,000 in commission, I win. Just beware, right? Because the math ain't math in there. And so I'll leave it at that. There's going to be a lot of that. There's going to be a lot of bad representation for next to nothing. Realize you get what you pay for. Realize if somebody's like, I ain't paying a buyer's agent commission, I'm going to do it on my own. Best of luck to you. You negotiate on your own against a listing agent who's got the seller's best interest in mind, who's only been negotiating real estate for 35 years and is really good at it. Like, you go ahead with them, and I bet you'll land somewhere where you're getting a great deal. Like, best of luck to you. It's interesting, man, if nothing else.
I love the passion behind it. And I mean, I mean, you and I have seen all of this when somebody chooses not to have a buyer's agent represent them. Guess who ends up being the de facto representation for them in the real estate transaction? These idiots.
Yeah.
And Matt and I are great at one thing. We do mortgage. We're like Ken from Barbie. Like, oh, my job is mortgage. That's it. Not real estate. Like, I just remember being in that situation so many times and being like, I don't even know if I'm allowed to give you this advice. Like, I just don't want to be in a situation where I'm liable or giving you bad advice, because it's literally, I usually have a counterpart. So yeah, I think it's important to have good representation. That being said, just because somebody's charging a lot doesn't mean they're great. The way to find out if somebody's great is to check their reviews. See how many transactions they've done. Interview them, right? Like, you have to, with the new NAR settlement, in order to go see a house that is listed by an agent who's in the National Association of Realtors, you have to have signed an exclusive agreement to work with the buyer's agent that you cannot get out of. I mean, you can get out of it if they breach the contract somehow or become unreachable, but if you just decide you don't like them, like, that's not a good enough reason. They may end up canceling the contract because they also hate you. But you can't just break that contract, and they're enforceable for, I think, like 12 months. So it's like, if you want to buy a house and you want a buyer's agent and you want to see a house, you have to have already signed this exclusive contract with an agent, which means you need to do your due diligence. You need to review them. If you want to know who knows the best real estate agents in town, talk to a loan officer. Talk to your local loan officer. They listen. We've all worked with great real estate. I mean, I'm sure this is true for real estate agents going the opposite direction. We've all worked with great real estate agents, medium real estate agents, and terrible real estate agents. And like, how good they are affects our quality of life. So as a loan officer, you call me and say, hey, who's the best real estate agent in this area? Like, I'm going to give you somebody that I know is going to make your life and my life easier by doing a great job. So that is Sean's tip of the day for how to have an effective
great tip. Yeah, that's right. And I'm always happy to refer great real estate agents. The thing about real estate that differs from mortgage is they're, hyper local. I can do a mortgage in 48 states and I can help you all over the place. Real estate agent who's, Sacramento, Placer County, like, they've got a handful of zip codes that they know really well, and they're a pro in that area. So if you find a mortgage broker who does a significant amount of business, like you said, Sean, they're going to have worked with a lot of agents. And when people ask me, like, what agent should I work with? I've worked with so many that I've got to interview you a little bit. What neighborhood are you looking in? What price point are you looking in?
Absolutely.
Are you a first-time home buyer? Are you a seasoned investor? Depending on those things, I'm going to say, you know what? Tony's your guy. Doug's your guy. Kaylee's your guy. Sarah's your gal. I'm going to know who to match you up with based on what you're looking for and where you're shopping.
Best resource. You don't even have to do any research. I mean, you still should, but call your
Just
favorite
call
local.
Matt, the mortgage guy.
Well, yeah,
Get all the
maybe. I mean,
research.
if you're not in California, maybe call
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 Sean.
me, call me, call one of us. All right, Maddie, this has been a fun one. Can't wait to discuss PCE with you. And next week we're talking temporary rate buy downs. They're all the rage these days, but should they be?
Yeah. I'm sneak peek into next week. Not all the temporary buy downs I'm advising anymore. I used to advise a handful of them. Now I've got one specific temporary buy down that I really like more than the rest. You're gonna have to tune in next week to find out which one it is.
I can't wait. Oh, actually, we're off next week. It's Labor Day. 2 weeks.
In 2 weeks. You got to wait 2 weeks for that great information. It'll be worth the wait. I promise.
I literally can't wait. All right, buddy. Appreciate you. Have a great day.
You too.
Thanks, everyone.